And that means we are now live on our YouTube channel, Tackle Trading's Halftime Report, our daily market show where we go through stocks and options and commodities and Forex, anything really on our mind in financial markets that's grabbing us from a chart perspective, a news perspective, and break down all the analysis so that you guys can have some insight as you go about your trading day. Welcome out to our veterans, hashtag Team Tackle right in the chat when you pop in. I always love seeing those hashtags because this really is a trading community and something we really love doing here on a daily basis over at Tackle Trading. If you are new to our channel, welcome out. Welcome out for the first time here, and make sure you click that subscribe, click the bell. We do this show each and every day that the markets are open. We go live at 12:30 Eastern Standard Time. In today's show, well, there's not a lot of broad market news, but there's some interesting individual company news. More stuff on the TikTok deal with Microsoft. We'll update the team on what China state media said about the deal and if it has any market implications. More conversations around stimulus, between the Democrats and Republicans. They're continuing to meet and negotiate over the terms of those deals, and that does have market implications. And some earnings roundup. Take-Two and Space and couple others as well. BP cut their dividend. We'll break it all down here one step at a time. We got a full crew here today. We've got Matt, we've got Mark, we've got myself, and Cody on the back end producing as always. Welcome out, boys. Matty, how you doing, sir?
Tim, doing really well. Excited to be here with the crew to break down the market today. And let me just fast forward a little bit in time here. There's not a lot today.
Do you like boring days? Let's start with
my
that.
God, there's nothing I like more in the last 5 months than a boring day where there's nothing happening.
Amen to that. I mean, my word, I was talking to Tim this morning about that. I was like, it's like you can exhale for a second. 2020 has been the busiest news year in the 15 years I've followed the stock market, and there is not even a close second. It's nice just to lay back and watch that thing decay.
Mark, the analogy I was thinking about, we've been in a hurricane for 5 straight months and we're in the eye of it right now. And it's just like, just give me a moment of just to relax a little, right?
Yes.
But when there's not the end of the world scenarios happening all the time. So no, I love today, Tim. Like, give me a doji all day long. We got the labor market numbers coming out on Friday. It's a lax day in terms of news, geopolitical news. They're negotiating on the Hill, all of that. We got some volatility coming down to us. There's no doubt about that. But today, relaxed day. Yeah, I enjoy it.
I think every one of us could use a couple of days like this where you just kind of can kick your feet up, you let the theta decay, you run your systems, you go through your accounts. Yeah, I'm with you guys 100%. Nice little reprieve when you got a little light day in the market, because it's not like there's not action in your trading, updating stops and management and triggers and all that kind of stuff. I had a couple of triggers here today off of our weekend reports, Matty. So, there always are things to do. But yeah, I'm with you guys. And it really is a light day in the market. So let's get right down to it and let's kind of talk about it. Matt, S&P, Dow, NASDAQ, Russell, just flash through the indexes. Anything that you see there, let us know from a chart perspective.
No, I mean, what we were talking about yesterday is we were breaking out of the S&P 500 as we went above that 3270 handle. And I mean, this market is so predictable when it comes to support and resistance zones right now, Tim. You really are significant whole numbers and moving averages at this point. Mark, when you're looking at the broad market, would you agree with that statement?
Yeah, the most interesting thing, and this will be a telltale sign if the pattern ever breaks. If you go back to the breakout that occurred on the S&P at the start of July, breaks out, tests support a couple times, support held, and then mid-July breaks out, and then you had several tests of that support last week. And so what you've had is you've had consolidation, breakout, test support, consolidation, breakout, test support, and now you're breaking out again. And so when you get those retest of support in the coming days, because they'll happen on intraday volatility, does that pattern continue? As long as that pattern continues, guess what? Stonks go up. Like stonks go up, stonks go up. So until the breakout level doesn't hold, it's pretty bullish conditions.
Yeah, I would agree with that. I mean, out of the four indexes, though, I mean, which one are you guys most interested in? The S&P is breaking out of that resistance. NASDAQ kind of pushing some tails here, Matt. Just give me a quick technical read on the NASDAQ. Those two obviously grab everybody's attention. The NASDAQ has been the leader year to date. Do we have a breakout here, Matt, or are these tails in place on the NASDAQ? I think the S&P is a confirmed breakout.
Well,
Yes.
yeah, I think you got to call the S&P a breakout. Obviously on breakouts, you want to see increasing volume. We didn't get that yesterday. You actually got the increasing volume on the back half of last week when you had a lot of volatility, with all those earnings reports that were coming in on Tuesday, Wednesday, and Thursday of last week. You had the deadline for the, government to get their deal done on Friday that, kind of passed there. So you had a lot of volatility with increased participation when the market was testing that 3,200, coming back up into that breakout of 3,270. Not a lot of participation yesterday, but obviously coming out of it, I don't think that's to be unexpected, guys. Last week was really, really volatile. It was news every second of every day. I think it drove everybody a little crazy last week because of how much news was out there. So I think the market's just taking a little bit of a breather in front of, the government's negotiations, some, obviously the TikTok negotiations that are going to be ongoing for the next, foreseeable future. 45 days is the deadline President Trump gave Microsoft to negotiate a deal. And, interesting enough, Apple kind of seems to be inching their way into those negotiations a little bit. It might get a little hot and heavy there. So it's going to be fascinating to watch Microsoft negotiate with TikTok while Apple's kind of in the wings, batter up to a certain extent. If talks fall through with Microsoft, here's Apple with their, juggernaut of cash on hand to literally just petty cash buy TikTok here. But, I think the market's just taking a little bit of a reprieve on the back end of some very, very volatile and important news that we got last week. And, looking at on Friday and obviously next week with further negotiations at the government level. So I think that's why you're seeing a little bit of lack of participation here, which is obviously to be understood when you just don't have a lot of news to really kind of drive the marketplace. But this market really does this trend in the market, just short-term trend, breakout consolidation, breakout consolidation, breakout consolidation. This reminds me of a very hot market, is what it reminds me of. Now, you're coming into a little bit of slowing momentum in that very, very hot market. But the last market it does remind me of is 2013, where, you were on the backs of quantitative easing infinity. You were pumping $85 billion a month into the market. And the market didn't seem like it wanted to ever form a bullish retracement. It would break out high base, break out high base. And as long, like Mark indicated on the pattern, as long as you're looking at that pattern, say breakout, wait for the high base, trade the breakout. The breakouts here are still kind of the technical pattern that you're looking at in the marketplace. And so as we're hitting into that intraday resistance level right there at about 3,300, you can kind of see it on the intraday. Kind of gets into that 32.95, gets into 32.97, gets into 32.95 again. You're approaching that 3,000 level over the last 24 hours, and that 3,300 level, in my opinion, is right in that zone of that intraday resistance level. And so, kind of like I said on gold, if you're looking for a new entry, not to continue a position, but if you're looking for a new entry, you want to see this consolidation and then perhaps see a breakout on the labor numbers on Friday.
Give me a look at the NASDAQ, Matt. Tell me,
Yeah.
this one's a little bit trickier, I think, in terms of identifying if it is a breakout or not. Now, obviously, if the NASDAQ does clearly get above these zones, I think you got to call it that. You got a couple of tails in there that are a little bit tricky for me, especially in the futures contract. Is that breaking out confirmed because you had the close yesterday, or do you wait for the tail, Matt?
I personally would call that a breakout, Tim. And it really goes back to that. And for new traders, this you might be looking at some of this and be like, well, do I do the wick or do I do the body? For the new traders out there, we have been debating wicks versus body since candlesticks came to America in 2000, right? So we've been debating those things, and even before we had the wicks, we debated the bars, right? So do you debate the low of the day or do you debate the close in the open, right? To me, I've always said you want to let the evidence kind of lead you to a conclusion. And when you only have one point of data, I typically say that one point of data is, don't worry about that wick, right? I don't care about that tick. A lot of times that tick happens at the very beginning of a cash open when, you had the futures market coming into it, and then you have some selling, initial selling coming into the cash open. And so that's what really kind of causes some of those wicks at the opens. But when you have two of them, Tim, literally at the same price point right there at about 1157, that does give you a little bit of a concern. But I would still officially call this a breakout. I would call it a breakout because you did close above that 11,000 level. If you had just closed above, say, 10,947, I would say, okay, I might concern myself a little bit more of those wicks at 11,000. But because you did close above 11,000, those wicks that tested above that level with the market closing at those levels, I think you got to call that a breakout. Even though you wouldn't say it's strong, right? You would show some concern because you didn't have the volume to support it. But taking into account the entire evidence, I would call that a breakout. But I wouldn't say that's like, oh my goodness, go borrow grandma's money to buy something with it, right? You got to be a little bit concerned, but I still think you have to be consistent in your approach to the market. Even if you don't love it, you got to call it a breakout.
One of the major bits of news that we're kind of waiting on, anticipating, it's been a couple of weeks now. In fact, probably over a month now that we've been waiting for this new stimulus thing to kind of give us some clarity. Mark, continued talks, obviously, on the Hill and with the White House. I heard that Nancy Pelosi said that they had a productive meeting, but still have some differences. Trump even kind of talked about maybe doing an executive order on payroll taxes and evictions if they can't get a deal done, like an eviction moratorium, something like that. Mark, what is the latest on stimulus that you know?
I mean, pretty much. I mean, there's been some real positive chatter about progress being made, right? Like trade deal progress, right? We've seen this song and dance before. So we're getting the progress being made, but Pelosi doesn't think there will be a deal done this week. And I want to have some, you say, don't call it a breakout. I want to have some clever tackle trading community member do a parody of LL Cool J's song. Don't call it a comeback with don't call it a breakout. I would enjoy that very much as a trading nerd.
LL Cool J reference. I think if you had that in the office pool here today, that we'd have an LL Cool J reference on the halftime report. You probably got 1,001 odds there. I like it, Marky. I had no idea you were an LL Cool J fan.
If you had a Mean Girls analogy regarding the financial services industry in the pre-production show, you would have a million points in the fake 10-point update. Yep.
Dude, how do you not like LL Cool J? Don't call it a comeback. I've been here for years. I'm rocking my peers, putting suckers in fear.
Honestly, the only song I know of LL Cool J is Mama said knock you out. Is that one? I think
that's the one I'm referencing.
Is that the same one? Oh, okay. All right. I had no idea that was the same song. I don't know the lyrics. I'm gonna have to go look that up. Spotify maybe after the halftime report here today. Obviously, Matt, negotiations between the White House.
He loves Spotify so much. He so wants to win the bet. He just let me anything to justify Spotify's valuation.
Not a good looking chart though. I'll tell you.
No, I was going to say there's questions around Spotify's valuations over the last month. Nice little head and shoulders formation. Look at 240. That 240. If you do close underneath 240, you're closing under that 50-day moving average. You might have a fairly decent shorting opportunity there, T.
No, 100%. In fact, that's a moving average pocket, Mark. That's got to grab your attention.
It grabs my attention because we have our 300-210 bet on Spotify for Philly steak lunch. Yeah. So
I like it. Well, it's still in play here, obviously in the middle. Not any news on Spotify here today. Matt, on the stimulus conversations, we read all the comments. We read Pelosi, whatever she says after those meetings coming out. They did say it was productive. Trump stuff. Any new thoughts from you on stimulus, Matt? It seems like an ongoing conversation.
No, I mean, you're in the middle of negotiations, and when you're in the middle of negotiations, I think you get a lot more interaction and importance and perspective from the political perspective than you do the financial perspective. I think from the financial perspective, it's like, yeah, you're in the middle of negotiations. This this is par for the course. Let them negotiate. Let's see what the final numbers come in out. I don't think you're going to see massive overreactions and underreactions while you're in the negotiations, right? Politically, I mean, it gets intense politically, like, accusations thrown, tough words being put out there. But the reality, anybody that's been in those, arenas in their life, like, it's a negotiation. In a negotiation, things are going to get said on both sides of the aisle. Let them work it out. Pelosi, Schumer, Mnuchin, Mitch McConnell, they've all talked about how they've had some progress, but obviously there's some sticking points there. And the number one sticking point is, corporate liability, and, how much are they going to fund with unemployment claims? Mm-hmm. And so right now you're really kind of stuck in the mud there. I think they've agreed on the $1,200 stimulus, and now they're just negotiating the parameters of how much they are going to curtail that $600. Right now, the Republicans are really holding firm at $200, with states picking up the rest of that, whereas the Democrats are saying, okay, let's stick with the 600 and have the federal government, pick up a large portions of that. So those state versus federal arguments, guys, they go back 240 years now.
They go back to the founding.
Yeah, this is not something new. This is something that goes to the heart of the Democrat versus the Republican Party, and kind of what they believe in, versus states versus the federal government, and the extent the federal government has authority over states. So, let those negotiations play out. Politicians are going to say what they want to say. I literally could care less until we see the final parameters. I'm willing to bet, like most negotiations in the world, when you start at 200 and you start at 600, there's going to be some middle ground, right? There's going to be some middle ground there. So to me, it's, obviously the longer it goes on, the less probability is, but I would still state that a deal is to be had here. And so I don't think the market's going to overreact to anything in one day, when the vast probability still indicates a deal is going to get done here.
No, I really like that metaphor you just said, Matt, because anybody who's done a negotiation understands that. And you can have weeks of just like back and forth talking. Thing in the political realm is people want to hear something every day. So they keep having to say, oh, it's moving forward, or, oh, we're disagreeing here. And that makes it harder to negotiate. Whereas in business side, it's like, all right, what's going on? It can take 2 weeks. It can take a month, take 6 months before you finally get a deal. Politically, people want red meat every day.
Oh yeah, they do. They want to be fed every day politically, no doubt.
Beyond Meat does not support that analogy.
Yeah, I agree with you guys. I do. I mean, we're waiting for final details, final numbers, and actually see where it is, and we'll get that clarity over time. I don't expect a deal anytime soon, though. This week, it feels like it's quite a ways off, in my personal opinion. Because we're just not hearing the details yet.
Well, once the July 31st deadline passed, there's honestly, I mean, you might look at it from a Democratic perspective. You might look at that situation and be like, well, there's people really, really struggling in America right now, and they need this money to, pay rent and put food on the table. And I completely understand that. There's a lot of pain economically. And so, with how much financial aid we've supported corporations in the top end of the market, my heart goes out to the consumer base. I think people should always support people. But I mean, the reality is there's not a deadline right now. And let's face it, guys, when did Patrick Mahomes' deal get done? It got done at the deadline, right? Mm-hmm. When you have a deadline to work to, it puts pressure on you to get to a deal done for that deadline. But right now, where's the deadline?
Yeah, there isn't.
I mean, if the Republicans, honestly, guys, and I'm just talking about from a negotiation perspective, but if the Republicans do not want in their heart of heart to see the federal government expand, the only thing they have to do is delay here.
Right. Yeah. And
now they would be hurt politically because you have an election, right? But if they truly do just want to stick by their state rights versus federal argument, the only thing they have to do is delay.
But don't you think if Trump actually does like a moratorium, an executive order to stop evictions, maybe they can win some political points there while they delay?
Oh, absolutely. And Trump talked about that earlier today. And, I think what he said was completely accurate. He said that, I actually really liked it. He said, you know what, if I have to come in with an executive order and put a moratorium on federal housing and evictions, I'll do it. You know, that's a politically winning argument, no doubt about that. I'm not suggesting that 100% of the blame of a deal not getting done would be the Republicans. What I suggested is if they truly do want to stay by their state rights argument, all they have to do to win that argument is delay federal spending. I think that's pretty clear.
Let's keep working through the markets, and obviously as those conversations happen, we'll keep breaking it down here on the halftime report. Crude oil next, if we can here, Matty, kind of just stuck in this range. You know, it looked like it wanted to dip below that 40 level last week, came below the moving averages, but quite frankly, everything is just consolidating here. Guys, pretty neutral in my personal opinion. Marky, any update on crude oil from a fundamental perspective, news perspective?
No, just keep cash flowing it.
Yeah.
Just keep cash flowing it.
Matty, chart's pretty neutral. Anything you see there?
No, same thing. I mean, you were stuck in neutrality here. You know, when you came underneath that 20-day moving average, the only thing you really did was shift to maybe you were slightly bullish going into that, hugging that 20, and now you're neutral, still expecting to break out. I don't think there's anything to be seen here, guys, until you see some type of action. And I'm talking on the buy side here. I don't think there's anything to be seen until you see action above the 200-day moving average.
Or below
And
the 50, right?
I'll tell you exactly what my analysis would be above the 200-day moving average when it happens. I will say wait for the retracement, wait for that Cody special, right?
Yeah.
Like wait for that Cody special, and that Cody special, we all know it at Tackle Trading. It's the breakout followed by the quick retest of that 200-day moving average or any breakout zone. Make sure that's confirmed, and then at that point you might have some room to fly there. And it's just a little bit Cody likes doing to give him some more confidence in the confirmation of that breakout. So, you know, that's what I'll probably be looking at with crude. On the downside, you know, you can't do anything on the downside until the 50-day moving average at a minimum. But even underneath that 50-day moving average, I mean, Mark, could you sign up for a short underneath, say, 38 when you have so much chop between 36.5 and 35?
It would depend on the catalyst. I mean, if it was just a technical and nothing had changed, no, I think it would get bought up pretty quickly. But if there was something that happened, like, you know, if it was an actual event, absolutely. So it would have to depend on the catalyst.
Mark,
I mean,
you're the one that introduced the pinch to us. If this continues to a pinch between the 50 and the 200, is that a powerful pinch to be broken?
Theoretically, yes, but it's 2020. And, you know, the old rules don't apply, young one.
Because I'm seeing that thing just slowly compress, and it takes a lot to finally pinch between the 200 and the 50 like it is. That might be what we need to wait for. But if technical analysis isn't going to matter here, I think that we're going to have to see those things really compress down before we see a movement one way or the other. That's my read on it.
Here's the beauty of a consolidation. Wake me up when it breaks out. Okay.
But even on the breakout, the length of this consolidation, it really is tough on the breakout, though, T.
No, wake me up to even pay attention. Like,
I'm with you on that.
Yeah.
I'm just suggesting that the breakout, it would be very difficult for me personally to trade a breakout in crude right now, whether it's bullish or bearish. I really do believe the length of this is very, very compelling, that something is happening underneath that we are not aware of, that we need to see that shaken out of. I need to see it break out of this range and then form a trend. I got to see that higher high. I got to see the higher high and then the higher low on the bull side, or I got to see the break with the lower high on the downside. I think you got to see a trend develop here before you really take anything aggressive one way or the other on crude.
Hey, breakouts have been great on oil. You've been able to get a whole 32 cents on the last two breakouts. Come on, what are you talking about? 32-cent breakouts.
They've been running. I'll tell you one stock that did break out, not stock, but a commodity broke out and run and continues to hit new highs all the time here is gold. Gold hits another high here, guys, 2014 on the spot price. Actually, now we're up at 2019. Just running, holding, can't even come back and find the 9 EMA. We have not been at the 9 EMA since the middle of July here. Matty, just beautiful chart there. Any update on gold?
It's just sexy.
It is sexy.
Listen,
Just
we're in an environment, I think, and you're starting to hear people, and when I say people, I'm talking about professional analysts who are throwing out figures like $3,000, so forth. Peter Schiff, of course, would say infinity.
10,000.
So it's just what it is. It's
Peter
just
Schiff's
what it is.
target on gold is about like what is it? It's like Robert McAfee's target on Bitcoin. Like
Yeah, I mean,
to the moon.
Well, was he the guy who put the bet
I'm
out
not
there?
saying it.
No, that's not. I agree, but that just made me think of that. By the way, can I get Team Tackle to do me a favor real quick? Can you just type in the chat? Gold is sexy. I just
Gold
think
sexy.
that's the way to think about it here today, obviously. And by the way, it's mainstream financial media, Mark, that's not always been attracted to gold or interested in gold. So the fact that these articles are now coming out, they're bandwagging this thing. Obviously, they're fair weather fanning it, and they're jumping on board. I don't think Wall Street really actually.
Gold is sexy with the best personality in the world.
Yeah.
Gold's who you marry him.
Stable.
You bring home to mother.
That's right. That's right. That's right. Somebody that you
don't
date
gold, guys.
Well, I'll tell you, commodity you
Gold's
do date
not
is
for
silver.
Tinder. Gold's
Silver
not
you
a
date.
Tinder date.
Golf is sexy as well, Chris.
Golf
I don't know if that was.
My golf isn't sexy, but golf is sexy. I would agree with that too.
Listen, I have commitment issues. Everything's a Tinder date. So
not gold. No,
Listen,
you got to settle down. You got to settle down with gold.
I mean, you are in an environment with gold where you cannot even there is no unreasonable price target in the current. I mean, listen, the only thing they're debating in Washington is how many trillions and how economic irresponsible the two sides can be. It's almost like you have this cognitive dissonance that has crept over the entire of America when it comes to debt. It's the money's not real. There's never can be any consequence. I like what Matt said yesterday. If this was another country, if this was Mexico, if this was somewhere else, and they were doing anything close to the level of currency, what we are doing, you would have an implosion. You would have little structural, systematic problems. And people will say, well, it's the reserve currency. Well, people like Goldman Sachs and more mainstream are pointing to literal problems. And it's like, yes, you want to help everyone. Nobody wants to see anyone hurt. But at some point, you're going to have to pay the piper. That's just the reality of it. So I hope it's not in our lifetimes. I hope it's not in our children's lifetimes. But Peter Schiff is calling for it by the end of the year. So
Peter's been anti-dollar bull gold for as long as I've been hearing about Peter Schiff, but he's kind of losing his mind a little bit, and I don't say that as a negative. I say that as a positive. He's looking at this scenario. He's like, man, this is just craziness. This is crazy train out there, right? Just crazy train out there. And so, I'm a big buyer. I'm a big bull on gold, and I don't disagree with his analysis. I do disagree with his time frame, right? I do, but we're on the same page with the analysis on gold.
And man, this would be a good moment to you did a podcast yesterday and dropped a lot of knowledge, and you're going to continue the conversation next week. And I think our members, I know it is not the sexiest area to spend your time, but I think it's critical for real life consequences. Will you just talk a few minutes about what you talked about on the podcast yesterday?
Well, we're doing a two-part series on the podcast on the history of currency, and that's what we really kind of detailed yesterday in the podcast, was just the history of currency. And I know there was I asked Tim and Mark after I got done talking. I said, I know I went through a lot, guys. Was it too much? And yeah, it was a lot, and it was. There's a lot of data in there. And I said to Mark and Tim, I said, yeah, I left out a lot. There's a lot of history there. But what I wanted to do yesterday is really just, get our community up to speed on kind of where we're at from a historical perspective. And when I talk about history, I'm not just dating modern history. There's really three phases of a currency history. You have your phase one when you have the first introduction of coin-based currencies. And I'm not talking bartering. Bartering was the first version of currencies before we had coins. But I talked about how in ancient Turkey, you had the first introduction of coins, and that really kind of led to the first reserve currency, coin based out of with the Greek drachma in the 3rd, 4th century BC. Talked about how that first phase really kind of led to the currency, the paper currency being tied to commodities, which was the second phase that started in China in the 10th century AD, when China tied their Chinese yuan to copper and the copper minting process, which really dominated that phase 2 of our currency history, all the way up until 1971, where almost every currency that had ever existed was tied to some type of commodity. Because when you're looking at a currency, there's actually 6 different categorizations that make it a currency. And the last one is storage of value. And the problem with paper currencies all the way back 1,000 years ago to ancient China, or ancient China would be basically they're all devalued. And so paper had no storage of value, and that's why they tied it to silver or copper or gold. That's why every country, every central bank would tie their currency to a commodity, because it would give it still that storage of value type argument. And that really lasted until Henry Kissinger and Richard Nixon in 1971, when you really started entering into phase 3 of your currency history. And that's when you really, when the world started embracing fiat currency systems that were non-commodity backed, which really kind of lost their storage of value argument. And the one thing that I haven't detailed phase 3 yet, because that's what we're going to be doing next week in the modern update to currencies, in terms of where we're at today from that 1971 to today, and then look at kind of reading those tea leaves. Where are we moving at into the future? Because I can promise you something, guys, we're in an experiment right now. I know, because it's happened in our lifetimes. People are like, oh, currency has just been the form of what we've done for our entire lives. And that's not true. It's only been in the last 50 years that we've embraced, from a societal perspective, the belief in paper currency. Before that, it was all about commodity, commodity, commodity. And so looking at where we are in the modern phase of phase 3 of our currency history, we're going to detail that next week. And I'm going to talk about kind of based on where we're at and what has happened over the last 10 years. Because even though we all bitch and moan about the amount of money and debt and inflation that we're seeing here today, based on what the government and the central bank is doing today, this expansion of the fiat currency system and the philosophy in the paper currency system, this is still relatively new in terms of an update over the last 10 years. And I truly do believe what we are doing here today in America with funneling economic activity through debt. And that's not just the last 5 months, guys. That's the last 12 years we've been funneling economic activity through debt. And what the argument I've made in the past is the response we made in 2008 and 2009 really shifted the international market's belief in the US dollar long term. And I think what Peter Schiff would argue, and what I would argue today, is what we're seeing today is simply going to exacerbate that and speed up that evolution because of what we're doing from a monetary perspective. So I thought it was important to detail the history of currency, because people, like I said yesterday in the podcast, people who do not understand the history, they're going to be the bag holders of this experiment we've done in the world from a pure fiat paper currency belief system. And I just simply believe that belief system has been broken. That what we've done with debt, what we've done with the asset prices in the stock market, what we've done with the refusal to accept any economic pain in any time frame, has put so much risk on your ultimate investment, and that would be your currency. And that's one of the reasons why the historical argument is why I am such a believer in owning gold, to protect against that, because I do not believe the fiat currency system experiment will last. I don't think we will look on the fiat currency experiment we've done over the last 50 years and say, this is what we're going to be doing in the future. I don't think that's what the central banks around the world are aiming for. I don't think that's what the governments around the world are aiming for. I think there's a reason, gold is being hoarded by Russia. There's a reason gold is being hoarded by China. There's a reason gold's being hoarded by the European Central Bank. There's a reason that Germany is now talking about getting the gold they confiscated out of World War II from France. There's a reason that central banks and governments are believing in gold so much, but they're trying to get their consumer bases to believe in currency. And so for me as an individual, I love America, but that does not mean I love the American dollar. I don't think anybody should love currency in any capacity. It's a creation. It's not real. It's like our good friend Christian would say, it's all fairy dust. It's a fugazi, right? And so in my opinion, I wanted to take some time yesterday to really just go through the detail and data of those historical situations that we saw currencies shift, that those important moments in time. And then next week, we're going to detail phase 3 of the modern argument, which is the fiat argument, how we finally embraced fiat currency systems, because fiat currency systems were nothing new, guys. Governments had tried them in the last 1,000 years and they never worked. But we finally got people to embrace in America and around the world, just embracing that fiat belief system in paper currency, which I do not believe is going to last in our lifetime. I just don't. So I'm going to detail phase 3 of the historical argument next week from 1971, which is a very important date. That's when we removed the gold standard from the equation of the dollar. The petrodollar agreement, obviously, in 1973 through 1975. The shift from a bottom-up industrial economy to the evolution of a top-down service-oriented economy in the 1980s till today. The 1999 date when Russia and China finally started saying enough is enough. We're going to stop buying Saudi Arabian oil. And then obviously the 2008-2009 fiasco that really led the international markets to start shifting away from the dollar, and then updating where we are right now and what the future would behold with, international reserve currencies. I think at this point, guys, I've long held this belief, but it has never been, my belief in the dollar losing reserve status has never been stronger than it is today.
Mm-hmm. It was a thoroughly enjoyable conversation, by the way, Matt. I really loved listening to you talk about it. It's clearly something you put a lot of time and research and thought into, and something you're very passionate about. And that comes through on the podcast. Part 1 was yesterday. And I actually think next week I'm more interested in kind of getting an idea of what you think is going to really happen moving forward.
Next week we'll put on the tinfoil hat a little bit next week. Not when we're detailing the historical arguments, because the historical argument is history. You can not like it, you can disagree with it, but in terms of what they did, but you can't say it didn't happen, right? We're just detailing the historical argument. But where you can really get where you really can get saucy is when you're talking about what that next reserve currency is. That's where people get really passionate about that next reserve currency, and I believe it will be I'll save this for the pod next week, but I do not believe we will have a singular reserve currency moving into the future. I believe we'll have baskets of currencies similar to baskets of commodities, that will be the next reserve status.
Mm-hmm. Well, I'll tell you, we'll look forward to that, obviously, and have that conversation next Monday. By the way, I went to Pinterest and looked up pinned boards for tinfoil hats. I might have to actually make me one and see if I can put it on. So that would be fun. We're going to do that next Monday. Let's keep working through the markets one step at a time. Silver, by the way, we got to take a peek at the chart on silver. And Pinterest, any excuse to bring up Pinterest, by the way, I will. Of course, everybody knows I'm kind of long and bullish Pinterest. Silver, what a beautiful chart here, Matt. Obviously, we're up another 5%. Didn't really get the orderly pullback, kind of just down to the 90 EMA, but it didn't really ever sell off either. A lot of great defense on there after one of the bullish weeks in like 20, 30 years. So got to love what silver's doing here. We're already up at 25.94 an ounce. You were talking about 30. We might hit 30 before we know it, bro.
When 30's hit, I'll be talking about 35. And when 35's hit, I'll be talking about 38. And when 38's hit, I'll be talking about 42. And when 42's hit, I'll be talking about 48. And when 48's hit, and it breaks out of that all-time high, I'll be like, yeah, scoreboard this. No, it's not a clean and orderly breakout here. But the one thing that I will say is now you do have some very significant evidence now that 9 EMA is playing a significant role of support now on silver. and you know, we always tell the joke, but I'll tell it again. It's almost like algorithms are programmed there now. You have, look at just in the last week, 3 different times in the last week where you ticked on that 9 EMA, and that's on the backs of a tick there, a tick there, a tick there. Ever since we initially broke out of 18, the number one support level that is formed on silver is that 9 EMA. And when you see that 9 EMA being so consistent on a growth trend on almost anything, you could be looking at any of those high flying tech plays that were from, you know, April, May, June, July type time frame. It would kiss off those 9 EMAs and boom. Mark, what is the significance? And most of our community understands the importance of the 9 EMA, but I'm sure there are people watching here today that, you know, don't understand the importance of the 9 EMA. What is that importance of the 9 EMA for you specifically?
Well, and I've done an extensive study on moving averages, and the 9 EMA is, in my research, my opinion, the most critical momentum short-term indicator there is in the world. And I would defy, I mean, it's religion to me. So what happens with the 9 EMA, and we saw this with Apple for months and months and months, what the 9 EMA is, it is this algorithmic buying signal. So to be above the 9 EMA, especially for an extended period of time, momentum has occurred. Momentum has occurred. And during that momentum, stock or ETF or gold or whatever it is, or silver in this case that we're discussing, is going up, right? So it's going up. Now, stocks or stonks don't go up every day, right? I know it feels that way, but there are days that it doesn't go up and you have those pullbacks. That doesn't mean that the short-term momentum has changed. It just means it's taken a little pause. Mm-hmm. And so when it comes down to the 9 EMA, what this is this is a momentum test. And algorithm buying occurs on a big level. Short-term trading occurs on a big level. And they're not betting that it breaks the 9 EMA. They're betting that the 9 EMA holds access support and goes up. When they're successful, which they often are, well, short-term support forms at the 9 EMA, price goes up. And so the 9 EMA is a critical momentum test. And if it holds, which it oftentimes does, computers are betting on it, short-term traders are betting on it, day traders are betting on it. Well, it's just a matter of time then before the existing momentum continues and upward prices resume. So
moving average, yeah, obviously that 9 EMA mark is something that our community knows a lot about. It's your girlfriend, obviously you talk a lot about it. That 9 is what I consider riding the lightning, and the silver
great
chart
phrase
for a long
great
time.
Phrase.
Yeah, definitely very, very bullish indicator when it's holding that 9 EMA. Matt, let's keep working through the markets if we can. Quick peek of the dollar, little bearish retracement that had been developing on the dollar there. Actually, a little red candle here today. In fact, we only had 2 little pop-up candles hit the 9. Matt, you talked about it yesterday. In fact, you called it. Like we might not get that deeper retracement. We have not in terms of one day here. So just kind of a little flag pattern. There's the 9, by the way, falling on the falling dollar. What do you see?
Momentum based. But you know, it's again, it's what I said yesterday, and I think you got to be consistent with your analysis. This is one of the things, little pet peeve of Kramer. He changes his analysis to fit the social construct to a certain extent. You got to be consistent on your analysis, in my opinion. And what I said yesterday, I said, you know, you might not get that deeper retracement, and if you don't get that deeper retracement, you're going to miss this because that's not the trade. I don't see the return versus risk really set up in that environment. And if you don't get that deeper retracement, you probably got to wait for the breakdown here.
Hey, listen, and that was momentum goes both ways, right? Yeah. That was going up to the 9, and what I call that's a quick slap down. Mm-hmm. That's a, hey, rally. Oh, no. Everyone still hates you. Slap down immediately. Quick retracement, slap down by the 9.
Yeah, definitely.
Chappelle skit with white baby powder, by the way. But Yeah, I agree with it though. I do. I mean, it's just, you just don't have the return, right? I mean, if you had a support level form all the way down here at 25 and then retrace up into 24, 25, 40, kiss off the 9, that's a different form of analysis, because then you have enough return back down to 25. But in a retracement, guys, target 1 has to be the previous low at 25.13. So to me, you just didn't have the return to justify the probability to cover the risks. And so that led to the potential breakdown analysis. And that's what we're looking at right now. And so when you're looking at the dollar and you're analyzing the dollar, obviously not a lot of people trade just the basket of currencies. A lot of people who trade the individual components, but a lot of those individual components are made on the basket of currency. And so you're seeing the same thing on the euro dollar. It's choppy, it's shaky. Let it kind of form that high base, let it form some consolidation. And I think that's what you're waiting for right now. You're waiting for some consolidation followed by a breakdown on the dollar. And that would lead to price appreciation on the international currencies against the dollar.
Mm-hmm. Mm-hmm. You know, there's not a lot in the broad markets. Bitcoin kind of holding its little breakout, by the way. Not much there in the chart, though. A little doji. Not really anything we need to even look at, but you can take a peek at it.
I haven't looked at it today. Let's look at it.
/BTC.
Hey, it's 2020. I'm interested in Bitcoin.
Kind of just holding up there, you know, obviously. It's impressive.
It looks like the silver pattern, though, right? You know, where we were talking, I mean, different version of it, but like 9 catching up.
Silver's far superior, but yeah.
But like, you know, it'd be interesting to see if, you know,
Are you that easily triggered? He just mentioned silver and Bitcoin in the same sentence. You're like, we are not having that discussion.
No, it's not going to be put into the tackle trading lexicon of them being compared in the same sentence. No,
he's comparing the chart.
No, I don't care. Anytime that happens with Bitcoin, no, it's not. No,
Bitcoin isn't.
If you're ranking 1 out of 10, Bitcoin's a 4 on the high base and silver's a 10.
So Bitcoin's not a way to stay on.
Bitcoin on the crazy hot scale is like 6 hot and 10 crazy. Silver's like an 8 hot and an 8.5 and like a 4.5 crazy. It's not even close.
Yeah.
So you're saying Bitcoin's not going to be the new world reserve currency? Is that what you're saying?
I am officially stating that Bitcoin will not be in the next reserve basket. Yes, that is what.
I will remind everybody out there, if you're a longtime listener of the podcast, back when Greece was having their problems in 2015 and 16, you said, man, they should just adopt Bitcoin. And actually,
but that was before like people without knowledge on Facebook said all you have to do is buy Bitcoin and get rich. That is before the get rich quick kids out there started embracing crypto. Once the get rich quick kids embraced crypto, I was out. But that's me in general, Tim. I'm out on something once the populace really says all you got to do. Once I hear that, all you got to do, I'm like, no, I'm out. You got to do a hell of a lot more than just that. No.
Yeah. No, it's not all you got to do, obviously.
Adam, it's not close. I would rather put my entire retirement account in Bitcoin. Like, it's not even close.
You don't believe in Kodak making drugs when they have
no I don't believe a chemical company should get a $765 million grant, because that loan's not going to be repaid to a bunch of buddies that have friends as politicians. You guys can Google all you want. No, that's not an investment thesis for me. No.
Mm-hmm. Yeah. Let's talk individual companies here, guys. As we transition into individual company news, a couple things I want to do out there. By the way, I do this at least once a week. I really enjoy it personally. If you're Team Tackle and you're watching the show, just pipe in, where are you watching from? It's a good reminder to everybody out there. We're a community. We're a national, international community, and we all come together to learn about the markets, and you can do it from anywhere. You've got a Wi-Fi connection, which is one of my favorite things about the stock markets in general. Let's talk individual companies here as well. And by the way, if you've not done it yet, smash that thumbs up button. Let's get the analytics up and get the word out on Tackle Trading's halftime report. And if you're new, subscribe, click the bell, come back and join us. Earnings roundup, we got a lot of them. We'll get to those here in just a minute. I do want to start with Microsoft and some of the conversations happening around Microsoft and this TikTok deal. Mark, obviously China State Media.
Can I just ask a question real quick before you get into that? Just curiosity, everybody's typing in where you're from. Is there any cooler name? I'm not saying it. I'm just saying cooler name. When you say I grew up in this, right? I grew up in Huntington, Utah. Does not actually, people aren't like, oh man, that had to be an amazing, childhood. No, it's not. But when Dina says I grew up in Van Nuys, I'm like, that just sounds cool.
And
It
Van
just
Nuys
sounds
is cool
yeah,
for
it just sounds
sure. I mean, Cody always says he grew up in God's country. So, I mean, they've
well,
got the
so
one
do
up.
we, because only God loves it, right? That's God's country. We
That's
grew up in God's
Texas.
country too.
Yeah. Pine Top, Arizona is a pretty cool name there as well. I like that one. Obviously, a lot of our regulars, Dallas, Calgary, Toronto, Sarasota. Hopefully, you guys are staying safe down there. Chris Knox says Hurricane Central. I know that that's been moving up the coast there, Chris. But
Yeah,
anyway, yeah. Yeah, definitely stay safe. Let's get down to individual companies, man. I want to start with Microsoft. Mark, what do you make of the Chinese state media and some of the comments? They called the U.S. a rogue country and that they're openly, basically robbing, this whole TikTok ByteDance deal. Make anything of that, Marky, or just rhetoric?
Well, it was just nice to see China gives a crap still. I haven't heard anything out of them for like 8-9 days since the whole consulate closing down. They've been very, very quiet. But basically, they're, aside from saying some, less than kind and flattering things about the United States, they basically said, listen, we're not against a deal of U.S. buying TikTok, the U.S. operations, but we're not going to get ripped off on this deal. So
Well,
that was the essence of it.
But Mark, I check the tape here, but China's response was not on the backs of anything Microsoft or TikTok said or did. It was when our president said that the United States government deserved to get a cut of the deal. And that's when China's like, whoa. You guys aren't getting a cut by buying a Chinese-based U.S. operations. We don't care if Microsoft or Apple gets it, but Trump getting, like, the government getting a cut, which when Trump said that, I was like, government's not getting a cut of a corporate merger. Not going to happen. But that's when China came out, Chinese state-run media is like, oh, no, we're not getting screwed on this deal. It's just rhetoric. And that's my point. It's just rhetoric. I don't think China was specifically talking about anything related to a potential deal between Microsoft and U.S.-based operations from TikTok. I think it was just because Trump said he deserved a cut.
Hey, and could I have my Republican Party back that I missed so badly? Could we do a capitalism check on the government requiring landlord fees for their entrepreneurial companies in the country? My goodness gracious almighty. I mean, where is the heart and soul of true capitalism anymore?
We're a dying breed.
That statement terrified me of like, if that's what the Republicans say, I mean, they are only 1 degree away from socialism.
I have not heard that from Republicans, Mark. So I don't think this is a Republican thing. I just think Trump was just talking, and China responded to that.
Mm-hmm.
I miss my conservative, true, whoever they are. I'm sure they're out there. They still exist. They just less of them these days, right?
Well, and we can talk more politics on the podcast, but I'll say this. I really believe both parties don't represent what they used to be. So these new versions of both sides of the aisle, I mean, it is not what I grew up, watching from political discussion and discourse and things like that. Right, wrong, indifferent. I think there's a problem with it, but I'm with you in a little bit there, Marky. I think that we're seeing something new here that we haven't seen in the past. Let's keep working through the markets. I think this is rhetoric. We'll get more information when Microsoft actually strikes.
And that's why I brought it up, Tim. It wasn't to debate politics or capitalism or all not, but I do agree with what Mark said. I brought it up simply to let everybody know that this has nothing to do with the Microsoft TikTok deal. This has to do with just rhetoric between Trump and China.
I think the deal happens. I think there's a lot of, I think there is way too much momentum and way too little disagreement. I mean, if China comes out and gives it implicit blessing and say it's only a question of price and who gets the money, that's not a big bridge to gap, right?
And I think Adam makes a good point. If we're going to bail out all these companies, which we didn't bail out Microsoft, but if we're going to bail out all these companies, why not have the government take the cut? And I wouldn't necessarily disagree with that, Adam, if the stance is we're going to continually bail out all these companies. I'm going to maintain the fact that we shouldn't bail out the companies. So instead of taking it to that next step in the death of capitalism, I want to come back to capitalism and say, let's not bail out those companies and let the free market dictate a company based on supply and demand, based on the free market principles. So if we are going to do and this is where, and Adam, this is where I really kind of struggle with my own philosophy from a political perspective, because I am of the one that that our needs are up to ourselves. I believe in the individual rights argument as an American consumer, as an American individual. I'm old school that way. And I think, Adam, you know that. But to me, I think we need to stop bailing out the companies. But my argument is, if we are going to continually bail out corporate America, we have to do things to help the consumer base in that. And so I support certain political philosophies, even though it goes against who I am in my core, because of what we have done from a corporate social perspective. And so that corporate socialism argument really, and this is just me speaking, but as a capitalist, it really hurts me. But as a capitalist, I believe in people. I believe in people growing and building business and people supporting people. But if our government is going to, for the most part, support corporations, I think it's up to the capitalists to come back and support people. So I do support certain things right now over the last 10 years that historically I would never have supported, because our economic system is really predicated on, helping those corporations more than the people. So I do struggle with that. There's no doubt about that. But as long as America is going to put corporations in front of its people, I am going to have to support the people, even if it goes against some of my personal capitalistic belief systems.
Well said. Yeah, no, definitely. Let's move on to other company in the news here, though. I do want to talk about Boeing next, if we can. Matt, there's some more news out of the, the aviation. What is the federal body that controls aviation? FAA? I think so. Basically, they want
the government, or it's FAA.
The FAA basically came out with like a long memo, I think 90 pages, something like that, basically highlighting 4 different design changes they need to make in their 737 Maxes. We were talking about this about a month ago, where we're like, oh yeah, we know that was going to be positive news, this, that, and the other thing. Boeing has quietly kind of deteriorated here, guys. I know the stock is up maybe 1% today, but I'm looking at a chart that is rolling over. It's going to take time to get these production things back into line. They've got all kinds of storage issues. I got a simple question for you guys. The further this goes down, is this shortable at some point here?
Is anything shortable in this market, man? I don't know. But there's some problems. Like Spirit Aerosystems came out, a company that I really like in normal times, came out in their earnings report today, and they said that Boeing, and they're a Boeing supplier. That's basically the crux of their business. They create stuff for Boeing. That Boeing ordered them to produce 72 737 ship sets this year, compared to 660 last year. I mean, a bet on Boeing is a bet on return to aviation and normalcy 3-4 years from now. That's a long time. That's a long time.
Matty, what about you? Do you think Boeing is shortable, or do you think the government backstop on a lot of the things that they're going to support them with, as well as the fact that it's Boeing and there's all the investor sentiment around it would hold it up? Are you more interested in buying Boeing at depressed prices, or could you trade that to the downside on the right trade?
I have zero interest in buying Boeing at this point. I'm far more interested in talking with Dina and Adam about how capitalists could support the ever-changing economic system.
Yeah, it is a more interesting conversation.
That doesn't get a lot of, we'd get people that aren't team talk be like, shut up and get back to stonks.
Well, I mean, here's the thing. Long conversations about capitalism are fascinating to me, quite frankly. I do love them. There's no doubt about it. But the reality is, I mean, Are we going to unpack that all here on a Tuesday? You know, that's a tough thing. We have a new system that doesn't really reflect capitalism, quite frankly, and it is sad. It does really, really sadden me that we do not see it. I'm with you on the corporate socialism part of it. I think it's a complex issue that we should have a conversation about, but it really would be a wonderful podcast, Matt. You know, talk about the economic state of capitalism, where we are here in 2020, and those kind of things. So I think that's more of a podcast conversation, personally.
Well, let's get through me killing the dollar next week before I kill capitalism.
Then
let's do that.
rebirth capitalism.
Well,
I want
to
an
tie it all
optimistic capitalism.
To
So
tie it all together, Tim, I mean, short anything you want if you're going to go against the modern form of capitalism that has supported markets, right? It's why shorting has been so difficult. Nothing really separates. Nothing. I mean, go find me a chart really in any sizable company that's had that nice 4-week downtrend that you see from a classic technical standpoint. It's really, really, really hard to find. So can you day trade short? That would be that's where I think the best shorting opportunities are. In day trading, but in swing trading, position trading, it's a tough environment.
I know the chart doesn't look like much though, but that last pivot to pivot really went from like 180 to 160. I mean, we're talking about, you know, a 12-13% move on the downside there.
And you're also talking about an environment that, because I do agree with Mark's overall sentiment that shorting is tough in this environment. 100%, I agree with that. But you are starting to see some separation in the marketplace right now. I read an article today, and I'm sorry I can't remember who wrote the article, so I apologize for that. But they were talking about how, as of 3 weeks ago, there was about 85% of companies in the S&P 500 that were above the 200-day moving average, right? Today, that number is 75%. So whereas as the S&P is going up and up and up, I mean, today, Tim, you were asking me, is that a breakout on the NASDAQ? Is that a breakout on the S&P? And I said, yes, that is a breakout. But what you're really starting to see here over the last couple of weeks, and it's the same conversation we've been having for the last 12 years, but it's really exasperated in the last few weeks, is the top of the market is getting historically heavy, and it's not bringing up all of the market. So on these days where we see the S&P and the Dow Jones, not the Dow Jones, but the S&P and the NASDAQ kind of lead the charge, you look at the breakdown. There was a day last week, and that day was on Friday of last week, where 29 stocks in the Dow were down and one stock was up, and that was Apple, right? And so you are starting to see some separation in that top of the market really drive the rest of the market, right? I mean, there's an old trading philosophy, all the rising tide raises all the boats, right? And that's been true in every market cycle. But when you start to see separation in that, you start to get a little bit more confidence in those opportunities on the short side, because now Apple, Microsoft, you know, Amazon, and those high flying blue chip tech plays that are seen as safe havens aren't bringing up all of the market. And this isn't surprising now that we're post earnings, right? We start to see some numbers, it starts to get priced in. So I do think, even though I agree overall with Mark's sentiment that shorting is a difficult proposition, I mean, Mark, we've seen a lot of evidence of really good breakdowns get gobbled up on the breakdown over the last 3 months, right? I mean, really good breakdowns get gobbled up. And so that's like, that leads you to be like, well, I don't want to short a breakdown. Now I don't want to short a breakdown. Let me just look at what is that next stock to buy, right? But you are starting to see a little separation where it does give me a little bit more confidence on the short side. I think we're early there. But I do have a little bit more confidence on the short side today than I did, say, 3 weeks ago.
I want to bring up capitalism and socialism again. Now you've triggered everybody here. I'm watching the chat. By the way, you know, capitalism and socialism, the economic systems, don't necessarily tie into what the political systems are. So when you think about what
you guys, hold on. I'm going to say something very clear. And if you get offended, you get offended. Talking about economics has nothing to do with your political leanings or belief system. Me talking about capitalism versus socialism from an economic design perspective has nothing to do with your internal passions towards Republicans or Democrats.
Capitalism's not right, left, or center.
You have to leave your political belief system at the door when you're talking about economics and market cycles in history of currency. Seriously. I don't want to offend anybody. That's not my purpose. I categorize myself as an educator. I want to teach people, but that drives me nuts when people cannot separate their personal belief systems from a macroeconomic design discussion.
Yeah. No, capitalism is not on right, left, or center,
not
quite frankly.
about
It's
you
economics.
as the individual.
That's right.
Stop being a narcissist.
Well, you've triggered it now, Maddie. I mean, now we're going to have to, I like it.
It's not always about you. You're not a special little snowflake. It's not about you. We're talking about an economic design that is worth $24 trillion on a yearly basis, that we are seeing massive evolutions in that. We have to have open and honest conversations without everybody getting offended because they're a precious little snowflake.
Mm-hmm. Yeah. I'm enjoying the chat here. Obviously, some other people have some thoughts on it as well. Patricia,
You should see the conversations I have with Tim.
Oh yeah.
I just feel good because not only did I trigger Matt, I triggered the entire message. So I feel like I have a multi-bagger in this one.
Yeah, you parlayed this one. Yeah, I like it. Kanye 2020, Jimbo. That's really funny. All right, let's flash through the stocks here, Matt. There are a couple other ones in the news, and I do want to get to earnings as well here. Twitter, I don't think this means anything, quite frankly, but they're talking about having to pay a $250 million fine to the FTC. Mark, did that grab your attention at all? Obviously, not protecting users' data.
One day, bad news will cause a sell-off. Something. All we have seen for months now is you see negative headlines on Twitter, and it could apply a lot of other things. And then what happens? It gets gobbled up like that. Like Twitter's had like at least 3 major headlines in the last 6 weeks, all gobbled up. One day, that's just the market we're in. It is like any dip, we buy. So no, like, listen, Twitter, social media companies, they're always going to have fines and potential regulation, and that's always something that's always hanging over the companies.
You know, I never know if Matt doesn't bring a chart up, if he's just disinterested in the story or if he's chatting.
Listen, I don't even know. Matt's chatting and chat.
No,
like,
Wait a second. Okay. I never check out. Get out of here.
No, you don't ever check out, but you're not a multitasker. I will tell you that.
Well, then why didn't you bring up Snapchat?
I should have brought up Snapchat.
I don't want to talk about Snapchat.
See, we weren't even talking about Snapchat.
There you go. I wasn't listening. I was literally just going to say, like in the chat, as I was not listening to you guys, I was literally going to type in chat, I'm trying to listen more as I get older.
I knew I had him. I knew I had him on that one. So
good call.
Hey, give me credit. I will admit when I'm completely baseless wrong.
No,
yes,
dude,
when your hand is caught in the cookie jar.
I did. I got busted. I got to own that. I got busted.
Dude, we're going to have a code word now when we know Matt is like ranting in chat and we know it.
I usually get it. Mark, I should have known you weren't talking Snapchat.
We're just messing with you, Matty. We're just messing with you. Take Two, some earnings companies.
What is that? What is the play on gaslighting, chat lighting? Matt's chat lighting.
Yeah. Matty, go ahead.
I am a man of the people, and when I see chat going on, I have to respond to it. I'm like a squirrel. I have to.
Mm-hmm. I like it, dude. I think you got to interact with the chat here. I love doing that. In fact, Team Tackle loves it as well. The chat is always vibrant. That's one of my favorite parts about our show, quite frankly. Our regulars coming back, having conversations. So definitely I like it, but you did get your caught there with your hand.
I did get caught. I got busted.
Yeah, there's no doubt about it. All right, Matt, run through some earnings. Take Two, Space. Yep. There's a couple I want to get through. Mark has some as well.
Well, let me just give you Spaces real quick before we get into Take Two, because Space's earning numbers are going to be really, really simple. They had 0 revenue. That's it. Moving on.
No, the most interesting thing about Space's revenue is that they issued 20 million more shares, diluting the shareholder value of all existing shareholders. And this has been a common theme. But this is the market. I applaud Space and other companies. If you are going to have a bubble market where people are euphoric and valuation. Listen, Kramer was on the show yesterday basically saying valuation doesn't matter on certain stocks. Hey, we got Davey day traders saying stocks only go up. If you're going to have this kind of lunacy going on in the market, hey, a company's like, hey, give us free money. If valuation doesn't matter, all right, we're going to issue millions and millions and millions of share. Give us some revenue to work, because the revenue can help their company long term, helps their survivability. They don't have to go out and issue debt. And if the market's not going to punish it, and it hasn't, you saw DraftKings issue shares. You saw all the airlines issue shares. You've seen a number of companies issue shares. Market doesn't care. They gobble it back up. If they're going to do that, keep issuing shares. Fund your company through this lunacy.
Well, I mean, Mark, at this point, why would any stock in the market take on debt that they would have to repay when all they have to do is issue shares and the public will gobble them up?
Well, I'll tell you why. I'll answer that. No, I'll answer that question. Hold on.
Let me ask it one more time. Why would any company take on a debt obligation that they would have to repay, meaning they take on more risk, when they could simply put that risk on the consumer base?
Because for some of these companies, there is no risk. You know, Google actually offered $10 billion in bonds today, Matt. And get this, their coupon rate, what they have to pay those bonds back at, 0.45% over 5 to 10 years.
Why would Google ever take on a debt obligation besides just offering it to their consumers?
Well, they just did it today. I mean, because the money's free. The money's free. I mean, there's literally no risk in the repayment. If
there's no risk to the corporation to offer corporate bonds at 0.4%. None.
Yeah, I do support what Space
even
did.
Hertz tried to do it. Remember, right? Hertz tried to issue more shares, being a bankrupt company, but that was the limit. Bankrupt companies can issue more shares that are worthless, but everyone else, they should punish the market. Like if you're running a business that needed capital, and Google doesn't need capital, they'll always have access to it, right? Apple will always have access to capital. But I'm talking about the thousands of companies that are struggling in this environment. If there are zero consequences or minimal consequences to issuing shares,
well, Mark, isn't that the entire problem that the central bank has created with their interest rates, though? And not just today, but over the last 12 years, it has encouraged corporations to do things that they in normal economic conditions they would never do in any capacity, right? In a normal condition, if the interest rate was 5% and Google had to offer 8% on their bonds, in no capacity would everybody gobble up $10 billion in bonds, because Google wouldn't ever offer them. They would gobble them up, but Google would never offer.
Like, I don't understand why Tesla doesn't keep, like, I mean, because if you're running a company, you're like, I want a great company that's successful long term, I would issue batch after batch after batch of shares, because it's free money. It's literally
now you're just talking your bet. You know that if they issue shares, it'll put pressure on the price.
Listen, I want to see with those pink shorts so bad.
We've seen Tesla offer more shares and they have not went down.
No, and it hasn't mattered, because that's the market we're in. It doesn't matter, because when you say, and the society believes valuation doesn't matter, then
everybody say it with me though, because I know what Kramer said about valuation doesn't matter. Kramer's wrong. Valuation does matter. And honestly, guys, a lot of people that are quickly transitioning to all you have to do is buy stocks because stocks always go up, they're going to have a pain train of a hellish nightmare when this market cycle shifts, right? And things can happen quickly. Things can happen quickly. So everybody say it with me. Valuation matters.
Valuation definitely does matter. In fact, type that in the chat there, Team Tackle. Matters. Valuation matters.
No, you know, my biggest worry moving forward is because the level of irresponsibility is increasing week by week as people have zero fear about stocks ever going down, is that you are going to get into, at some point in the future, a margin call situation as trading accounts, as investors, as institutions become over leveraged. I mean, we saw this with gold, right? We saw it got killed in the margin call situation in March because people were over leveraged. And I think, I mean, we don't learn because there's never any consequence in this trading. But eventually the froth is there. You know, accounts are too over leveraged. Go check your own trading account. You're probably over leveraged right now. When that happens, the domino effects that can happen over a 2-day or 3-day period can be very, very impactful. That's why we're always saying, check your margin. Don't be super greedy. Trade, right? but don't get into a point where a 3-day sell-off could wreck your trading accounts and give back months and months of profits because just you had to make those few extra trades to get that little bit of extra leverage.
I have a sneaky suspicion that, margin calls are one of the arguments for the Bear Porn newsletter coming out this week is what I would guess there, Marky, a little bit of leverage here in the markets and whatnot.
Could you imagine the leverage rate at the hedge funds right now?
I'm sure they're all in. Yeah, I'm sure. I mean, listen,
they're not all, but the problem is they're not all in with their money. They're all in with everybody else's money.
With derivatives. Yeah. A couple
but
more.
They know, but this is the thing is there's this belief that, hey, if the market has a couple down days, Jay Powell will get off his butt and go say that we're now buying super duper bonds and that we're, the Fed has our back on any dip. Like it's psychological setting up for something that, I don't want to be over leveraged when it occurs.
Sure. No, I'm with you. It's great advice as well. Good reminder. Check your margin, check your leverage. Matty, next on Take Two.
Yeah, Take Two Entertainment. And Take Two Entertainment, in the gaming space, you have Take Two, you have Activision, you have EA Sports and whatnot. Coach Frank and myself, and I think a lot of people in Tackle prefer Activision. It is a Tackle 25 stock. But when we were breaking down the fundamentals behind Take Two, EA, and Activision, they were very consistent from a fundamental perspective. It was kind of like when you're breaking down those housing stocks, right? You might have your favorite, right? Whether it's Toll Brothers, KB Homes, or DH Horton, you might have your favorite, but they're all fairly similar, right? Same thing with the gaming industry. You're going to Take Two and EA and Activision. Activision being my favorite of the bunch. Activision does have earnings later on tonight, I believe. In fact, this space, the communication space, is really kind of hot and heavy with earnings this week, with Disney reporting tonight, Twilio, Match.com, Activision all reporting tonight. Obviously, Take Two reported earlier today. And here's what it was fascinating about Take Two's and why I have a little bit of confidence in Activision here coming into tonight. And Bradley, to answer the question, Activision on earnings, do you get in, do you get out, or do you get out or do you stay, right? To me, it really depends on what your time frame is. If you're trading it, if you're selling credit spreads against it, that are non-earnings related strategies, you obviously get out and reassess the situation because there's always going to be a trade after that. You take the risk of the market gap out of the equation and you reassess post earnings. But if it's an investment, you're never going to get out, like ever. Like you're not going to get out 4 times in front of earnings. It's just not going to happen. It's not going to happen from a cash flow perspective, from a dividend perspective, and from a tax perspective. So from those perspectives, you don't want to get in and out of investments. You want to hold those long term. But regarding Take Two's earnings, I expect a pretty decent earnings out of Activision tonight, especially given what we've seen with the market response to Take Two's earnings. Take Two's earnings were really good in some regards and lukewarm in others. And what I mean by that is when you're looking at the revenue of Take Two, they had $831 million in revenue versus an expectation of 489. That is a massive beat on overall revenue, an absolute massive beat on overall revenue, which showed an increase of 53.8% in revenue. They also slightly increased their forward guidance as well as Take Two. But one thing that was a little bit of and again, I want to hear your take on this, but their EPS number only came in at 77 cents a share versus an expectation of $1.71. So despite the fact that they destroyed revenue, they must have had some increased cost. And I haven't dug into Take Two's earnings in depth to really kind of see where those increased costs were. I don't know, Mark, if you did, but the market response, despite the big miss on EPS, does give me confidence on Activision, ATVI here, which is my favorite company in this space. And again, you're splitting hairs there. If somebody said Take Two or somebody said EA, I'd have absolutely zero issue with that. Zero issue with that. Activision is my favorite, quite frankly, guys, because I like the games of Activision far more than the games personally, because I like to game. It's like, how many gamers are out there? I want to know how many people like to zone out in a game, whatever that game is.
I love my video games. There's no doubt about it.
It's
board games, video games. Yep.
It's how I literally cease to exist from human. It's how I get away, right? It reminds me of Kevin Spacey off House of Cards, who played Call of Duty, right? Activision. I like to zone out and get away. So I personally like the games of Activision. Doesn't mean Activision is a better company than EA or Take-Two. Again, it's like splitting hairs here. All of them are pretty fundamentally good, and all of them have done really, really, really well since the pandemic hit. Now, the question for Activision is the same question we had for a lot of those high flying stocks. Can they support it? Not EA, but Take-Two here, a little concerned on their EPS number. But again, I got to dive into why that EPS number didn't beat.
I saw the headline. It didn't make sense, Matt. In fact, I dug into to try to figure it out. Marky, what was the big miss? Because obviously when a stock jumps up on a big miss like that, you dig into it. You're like, okay, revenue's up. It's in a space we like. What was the EPS miss all about? Do you know?
I didn't dive deep into it just because, I mean, I follow Activision, is the one video game company that I know like the back of my hand. So I only need one video game company. So I cannot.
I disagree with that. There's too many good ones. I mean, even Matt, like EA, Activision, Take-Two, SE is a good one. Sony even had good numbers here today. I get why you say that, Mark. You've got a limited number that you kind of watch and track, but there's so many good ones in this space. There's a bunch.
I agree, but in terms of Take-Two, I can't find the EPS beat. I mean, the market's really focusing on the sales jump of 136%, which is a massive jump in sales, massive jump in sales. And I don't care if we were all staying at home and needed something to do, to see 136% increase in sales and a 53.8% increase in overall revenue. Those are massive beats. And so whatever the reason for the miss on EPS numbers, I think the market is really focusing on the overall revenues, the increases in sales, and the increases in overall revenue here. Activision, I think you can expect maybe not a similar result, because Activision's up 1.5% today on the backs of Take-Two's robust report. But it does give me confidence in Activision moving forward. Now, any trade, you never hold a trade through earnings, because earnings are you don't have an edge, right? You have circumstantial evidence, but you don't have an edge. Everything with Take-Two is circumstantial evidence for Activision, but it doesn't lead to you having an edge. If it's an investment, it's an investment in the long haul. You're going to have to deal with earnings all the time. You learn to deal with it. You learn when to collar an investment, or you learn when to protect an investment. You don't get out an investment unless the fundamental condition changes. For example,
collar or exit. We don't want any blood on the floor, right?
Yeah,
that's Adam's meme from last week. I mean, collar or exit. We don't want blood on the floor. That was a beautiful thing. I'm with you 100% on that. And although we do expect Activision to come out and kill the numbers, we don't know what the price reaction will be. We just don't. So that's where we'll break this one down here tomorrow, Matty. What are the ones you got in earnings there, brother?
I got just really kind of two more. A recent IPO I wanted to update very quickly. Warner Brothers Music, which was Warner Music Group, which was probably the biggest IPO of the year so far from an overall market cap perspective. They came in at negative 84 cents a share versus the expectation of negative 101. Actually, I got that missed. They missed on EPS numbers. Came in at about the expectation was 1. I don't see anything here, right? It's just a company I've been tracking since IPO, but I don't see anything from a technical or a fundamental perspective yet. Just want to quickly go through that.
Post IPO, by the way, just real quick, one of my own personal rules is to wait until that first earnings, so I do like seeing this, and then I'll be tracking WMG as patterns develop, Matt. So nothing in the earnings, but now that you're past in earnings, I do find the charts more compelling when they
Well,
do that.
so do I. You got your moving averages, you got
Yeah.
your trends, you got historical support and resistance. You can start triggering off of. I think we're still early on Warner Brothers. I mean, on Warner Music. I keep calling it Warner Brothers on Warner Music, but I think it's something that we should track.
Yeah, I agree. I agree.
Then the last one from an earnings perspective was BP here, and not BPOP, but BP here. BP here, Mark, earnings numbers, par for the course with the energy space here. Help me understand the upward movement in price because I don't
The
understand it.
stocks only go up. Like, I'm serious. Like,
But I know that said, but I look at this trend and BP doesn't just go up.
listen,
So
the earnings report was par for the course. Most oil companies, whether refiners or these things, they had about -50 to -60% revenue decline year over year. BP also cut their dividend. And my best guess, if you want to apply logic to the market, is that investors like, hey, a cut in dividend will mean they have more cash available. I mean, that's
dumbest thing ever, though, and I understand why you say that, but it was worse. I mean, they'd lost $1.98 a share versus the expectation of a loss of 99 cents. They missed on revenue at 31.2 billion versus expectation of 42.8. They had a 57.7% decrease in overall revenue. They cut their dividend in half. There is nothing, not one thing to like in BP strategy, and in terms of their raw numbers, unless they, I was going to say, unless they announce some massive restructuring, but they're already doing a massive restructuring.
Mm-hmm. This is what happens when you're in a bubble. Nothing gets punished. There's probably a level of manipulation going on in this market that is unprecedented in the history of markets.
And here's the manipulation in BP. It's the same thing that we saw when you had the marijuana movement really kick off a couple of years ago, right? When you had the high flyers, when Tilray was going from 10 to 300, right? You had all these companies start, just make announcements. We're going to be doing CBD, related drinks or whatever it is, right? And all of a sudden they just got this massive boom in the short term just by saying they were going to do something in the marijuana field. You've seen that same thing, the euphoria take hold a little bit in other areas of the market when they're like, oh, we're going to do some crypto type action now, right? They want to take advantage of the crypto euphoria. So they change their name to some crypto, or they say we're going to announce something in the crypto space. And now at these energy plays, and it's something I do agree with, from just an individual perspective, but it almost seems like it's just like now that these energy companies are just getting slaughtered in fossil fuel type production, that now all they have to do is make an announcement that they're going to a new green strategy. And all of a sudden it's the entire market's like, oh, green, they're going green. Oh, buy. I'd like to see what they actually do with that. But it does seem like initially some of these energy companies that offset some of their really, really, really negative earnings news is basically making announcements very similar to what Larry Fink did a year ago when he said we're going to move to clean tech and really kind of embrace that EG movement. You're now seeing that out of BP. So I do celebrate with the market BP announcing they're going to a green strategy, but it also seems to me that it's to offset simply some of their losses in their fossil fuel production.
No, listen, we just need to accept the fact human beings are no longer in control of any of this. And I'm not even joking around. Computers buy at support. We have seen, and we were talking about this weekend in some of our weekend shows at Tackle Trading, the uncanny, like support for a reason, it tends to hold, but the uncanny ability of multiple support levels just holding time and time again, because computers are coming and buying a support. BP had and has a support level around that $22. You go to a weekly chart, it's really easy to see. And comes down to support, it gets bought up because human beings and logic and reason and rationale and what investors are doing, that is all, it's a fantasy. It is a total fantasy that doesn't exist in modern markets, or at least this market in the spring and summer of 2020. Comes down to support, computers buy. It's really that simple.
But don't you think this is going to be a trend in the energy sector of cutting dividends and all that kind of stuff? I have no interest in BP on this. I mean,
why
the only
you
reason
would
to buy
invest in
BP.
any of these companies?
But
after
that's
you
my
start-
point, Tim.
Yeah.
It's that I because again, it's weird. I like BP announcing that they're moving into clean technology.
Sure.
I like
Yeah.
that because I've long held the belief that it's the energy space, it's these fossil fuel companies that truly, with Wall Street, with the Larry Finks and the BlackRocks and the Goldmans of the world, speaking with where they put their investments. But I do think it's the energy space of, BP, ExxonMobil, Chevron, Schlumberger that really does shift that movement from a historical perspective. So I do celebrate it. It just seems to me that the timing is just to cover up some really bad news in BP.
Of course.
And even the earnings numbers is par for the course. But this is one of the bigger companies in the energy space of slash their dividend. And that's one of the only reasons to invest in a energy company right now is because of that dividend. So it does seem like they're trying to cover a little bit of that negative news with simply saying we're going to be moving into clean tech. We're
By
going to
2030, by the way.
Yeah. So
Like that was the date they gave. Like the $5 billion commitment is not like next quarter. They said by
No.
2030 we will get.
Yeah, and so that's why I'm like, okay, I like it, but if this was really a priority to BP, that budget would be in for 2021 and not for 2030. It seemed like they were trying to cover negative news, and so I don't believe in the support bounce here. This is a stay away from me.
I agree.
Why you would invest in this? I mean, the dividend was the only reason, right? And those dividends,
The only reason.
they're not safe. Even the remaining dividend isn't safe.
Yeah.
So like, listen, if you're a pro member in tackle trading, we can have a long discussion about a million other dividend stocks that are a lot better than this space.
Let me ask you guys a question.
Sure.
Fundamentally speaking, not technically, not market euphoria, fundamentally speaking, when we're looking at economic data and we're looking at fundamental data out of these companies, what is the most risky area of the market from a sector perspective fundamentally?
Energy.
Yeah, energy.
It would have to be energy, right?
It's got to be the lowest
and,
ranked.
and I don't think it's a close second. Maybe you're talking the banks.
Yeah, maybe. I mean, obviously you're dealing with the
second.
Federal Reserve, though. No, not a close second. I mean, in fact, the second would be the debate. Who's second?
I was going to say the same thing.
Yeah. So if the second, and I agree with that, which means if you cut the dividend, why? Why would you be looking at this company? Because nobody trades BP, guys.
No.
They don't trade Exxon. They don't trade Chevron. They trade tech. They trade crude. They trade Bitcoin. They trade silver. There's so many better trading vehicles than energy companies. So they don't trade energy. They invest in energy because of the dividend. Mm-hmm. That dividend is such an important cog for these energy companies. And so when you're slashing the dividend and saying, oh, and by the way, but by 2030, we're going to be investing into clean tech, it's just like, get out of here with that nonsense.
Get out of here with that nonsense.
No, and if I knew the existing dividend was safe from now to the end of time, it would
no, you can't.
You can't say that about any energy company. You can't say that about Exxon. You can't say it about Chevron. You can't say it about any energy company. Yeah, you just can't.
You just can't.
Yeah. Any more on earnings, Matt, from you? I know Mark, you had a couple.
No, it was actually a fairly light. Somehow we still got an hour and 40 minutes of content out of this light news.
Well, there are one more Cinemark CNK. At some point, I mean, I keep selling naked puts on movie theaters because nothing matters, right? But I just thought this also, I once again support holding recently on the double dip on Cinemark. They did $987 million in revenue, $960 million in revenue a year ago. They did $9 million in revenue this quarter. That is a 99% almost clip in revenue.
If they partnered with Netflix, they would have made all that money.
But like once again, and lost a massive amount of money and this and that. But and we've seen this theme, and it will likely continue. These companies that are in the heat of the huge, horrific, they're not penalized. In fact, they're going up. They're not being penalized at all this earnings season, these type of companies.
By the way, I did see a report that Cinemark also rejected the idea of that quick turnaround that AMC is going to go into the agreement with Universal. They're like, no, and they have more theaters, by the way.
Cinemark's
900
in a much better position financially with cash and liquidity than AMC is.
But that's startling. 900 million in revenue to 9 million in revenue. I'd like to know what movies they were playing to get the 9 million in revenue. Quite frankly, were there any theaters even open? I haven't seen them open that much. I guess certain places, maybe there's a couple.
And my biggest kick out of it all, and I actually chuckled on this, an analyst broke down their revenue on concessions year over year and this and that. I'm like, really? You spent 5 seconds doing any work on that? Like, it's like, yeah, they didn't, bro, it was all bad.
Yeah.
Like, historic bad.
Yeah. Any more, Marky, from you?
Just AIG, another one, like, you know, a couple insurance companies I track, AIG had it. I selling off pretty significantly on the news on this one. They didn't make a lot of money this last time. The management came out and really tried to pound the table that this was a COVID-19, not a structural issue. Market didn't really like it, but you know, those insurance companies and financials, they are in all of this market euphoria, man, investors hate the financials. They just hate the financials right now.
I'll tell you what they don't hate are the solar companies. In fact, one of the only companies grabbed my attention from a chart reaction perspective on earnings, Solar Edge, SEDG here, Matt. $8 billion Israeli SEDG. And I did not know this, bigger company than First Solar by a little bit, about the same size, relatively 6 billion, 8 billion, but they came out and they absolutely blew the doors off their earnings. Sales were up 136%, came out and beat some of the numbers. So I did like the report I saw from Solar Edge here, kind of breaking into a new high up at those points. And it's a lot of solar companies looking good. Vivint, we've looked at in the past for solar. Actually, look at First Solar here, breaking out of a resistance point as well. Kind of grabbed my attention to look at that industry again. I know we got earnings coming out there in a couple weeks, but these stocks have been hot. Let's start moving into final thoughts.
Such a pretty breakout if it wasn't for earnings.
I know. And man, I got a lot of old history, old times with this company, Matt. I've traded a lot over the years.
This First Solar was the second trade I ever made.
Yep. All right, guys, let's go into final thoughts here. Let's kind of, start to wrap up our show. There's several stocks that are grabbing my attention from a watch list perspective. I got to tell you, the stock and the options report, you got to go back to them on a day-by-day basis. Use the watch list, really cultivate it, keep an eye on it, get ready for your triggers. Take a look at some that grab my attention here, Matt. We won't go through a lot of them, just from a chart perspective. Carmax, KMX was on our report over the weekend, and I really like the way it's developing here, knocking right on the door. We are very, very close to that breakout at that 100. Look for that conservative confirmation on that one. McDonald's, and this is an interesting one here on Mickey D's. I got to tell you, because when you have these retracement setups and you get the pullback, well, now you also have the breakout in place. So you have the pivot already developed, already kind of trigger confirm. If you miss that, Matt, you update trigger, now play it as a breakout. There's several ways that you can approach that. Good looking from that perspective. But really, Matt, the chart of the day and the only last one I want to talk about is Netflix. We talked about Netflix, and I'll tell you, I was watching this one. I've been watching it. We're now back above the 500 level. Can it close there? Can we hold the move from today? If it does, I do like this movement out of Netflix here today. Matty, you next.
The only thing I'll say about the McDonald's and the Netflix discussion is those were two of the stocks in our scatter report meeting on Friday that we probably had the lengthy discussions on,
Yep.
Really analyzing that $500 breakout on Netflix. I was really lukewarm on it, T, and your argument, you made a compelling argument, and we finally it passed my veto, because I had vetoed initially Netflix, and I believe Mark, you had vetoed my McDonald's pick initially, but both of them made the list. The breakout of 500 and the $200 support bounce on McDonald's. That was a great call by you on Netflix. The CarMax one, KMX here, this is one that I'm starting to really, really like the technicals coming into this potential breakout. I don't care about the 103.18 tick up there, like Coach Frank said on Friday. That was literally 2 days before pandemic hit and economy was shutting down, and I just don't fault Carmax for getting spanked in that environment, since everybody got spanked in that environment. I love the potential breakout here for a couple of reasons. Number one, love the run up off the double bottom of the 200-day moving average on Carmax. I also love the fact that it didn't break out when it was overextended. As you had made that run, you ran from 85 all the way up to 100. Guys, that is a 15% movement in a stock in front of a breakout. A lot of times those breakouts don't have the legs to continue. So I love the consolidation. Look at that Mark's girlfriend. Look at that 90 EMA catch up to it, and then boom, pounding on that $100 mark. With the test above the 100 today, with the wick that preceded the pandemic, I do have a little bit of concern with being aggressive above that 100. I would love to see a close, and yes, you may miss it out because a close above 100 might see euphoria take hold, and it goes up to 108 in no time, and you miss out on it. I'm okay with that. I think the evidence leads to, you need to see confirmation here. I think the evidence leads to that. And so when it comes to trading, everything is about probability, right? Nothing's a certainty and anything can happen. But for me, the evidence of it testing above 100 it leads to really kind of wait to see that confirmation, right? Let's see a close at 100, whether it's a 101, 102. Let's see that close above 100 because that is the indication by the market telling you it can withstand that higher price threshold, and that there's other buyers willing to pay a higher price than you're willing to pay. That is very important psychologically. So I need to see a close on Carmax above 100. I want to fault people for saying I'm going to be aggressive above that 100 mark and front run that breakout. I want to blame people for that. It's just, I believe based on the evidence, a close is significant here. So let's see that close on Carmax. The Netflix breakout of 500, I like it. Stop loss would go right underneath 500 on that one.
Yeah, I think a tight stop, keep the risk cheap and all that kind of stuff, because really, I mean, if it fails, if you get a close and it fails and all that kind of stuff, you've lost your premise. But, you got to build your own trading plans out there. Definitely keep an eye on it. And there's a bunch of other ones on those lists, by the way. Go back and review those watch lists. Maddie, final thoughts from you, sir?
Oh, no, light news day. I really enjoyed the halftime report on the light news day. We can kind of get into some
Just chill.
Yeah. It's kind of relaxed.
And for everyone that got their blood boiling today, when I brought up socialism and capitalism, I'm going to bring up religion tomorrow, and then your favorite football team.
I will tell you, at the Justice households, there is no topic that is off limits. Like, we grew up.
Oh, there's one.
There's not.
There is one.
Which one?
Is whether or not a transport in Axis and Allies can move two spaces and then drop off.
That will never be settled. That will never be settled. But growing up in the Justice household, we talked about religion, we talked about money, we talked about politics, we talked about, topics that other people aren't comfortable. We talked about race, we talked about everything. No topics off limits, right? So Mark, you say like all the topics they say don't talk about, which leads people to be ignorant. I'm very happy our father had those conversations with us growing up.
Yeah.
See, I always just pretend it's like Jimbo in the chat and he's the only one, and Jimbo will allow me to say anything I want.
Linda, do you have to scoreboard today? I mean, I didn't bring it up. Jazz looked bad. It's just, I don't know what happened. The Lakers went on a couple runs. Congrats to the Lakers. They're a great team. Like, LeBron James is like, Elon's all over the aliens built the pyramids, and I support it because LeBron James is an alien. He was sent down to be a basketball god.
He's incredible.
He's amazing. I just absolutely love LeBron James. But it wasn't
watching
LeBron last night. It was Anthony Davis. Anthony Davis just started acting like Steph Curry. Seriously, draining threes, 4-point plays. Anthony Davis was a beast last night. It was impressive to watch. It was impressive to watch.
Did you see the news out of the NFL? They're going to fine players $50,000 for COVID violations. So if you don't follow the rules, $50K.
That would have been $5,000 if it wasn't for baseball. The NFL players complaining about today, they should complain about the baseball players.
Oh, listen, those NFL, that is, I mean, you're talking billions of dollars, and they do not want to mess around. I mean, because people are irresponsible.
Yeah.
The NFL is a
There's just too much money on the line.
dollar business on a yearly basis. Guys, the revenue that the NFL brings in is Amazon like. I mean, that's how big the NFL is. They're not going to mess with that.
No,
Yeah.
they're not gonna, and it's still gonna be hard, right? It's a really, really contagious disease. So
Yeah.
Well, the NBA's got it figured out. They're going to bubble up next year too, I bet.
Yep.
They haven't had one COVID case in the bubble, not one so far.
Yep.
it's amazing with COVID. It doesn't seep through walls like some boogeyman. You have to actually interact with people to get it. It's amazing. Science.
Science.
Dude, I was at the store yesterday and the checkout teller literally sneezed right in front of me. Did not cover his face.
Yeah,
Did not
listen,
have a
I
mask
hope you
on.
get COVID and don't
Don't
die
say
from
that.
it.
Oh, do not say that. That's such bad
Bad
Listen,
karma,
I've been
dude.
telling you to do
Such
the
bad karma.
drive-through pickup. They
Nope, that
they
is-
bring the groceries to your car.
Might as well be asking for somebody to sneeze on you with COVID.
Yeah, like anyone's gonna get within 6 feet of me.
All right, guys, we are done here for today. As always, by the way, if you have not downloaded or listened to the podcast yet, that comes out on Mondays. We just dropped that episode. It's part 1 of a 2-part series. We'll continue part 2 next Monday as well on currency and the US dollar. And this was the history of it. The next one's going to be about the future of it as well. We will be back tomorrow with our halftime report. By the way, we do the show every day. We do the show every day, 12:30 Eastern, whenever the markets are open. If you're a regular subscriber to our channel, you know that. You come back and you enjoy it each and every day. Smash that thumbs up button.
One last thing, guys.
Click subscribe.
Definitely check out the podcast. It's not going to be as entertaining because we go through a lot of historical data, but I think it will help you understand the history of currency.
Don't disclaim it, dude.
Listen, dude, no, that was a good podcast. I mean, listen, I
loved
love
it.
history podcast.
Yeah.
I love learning things in podcast. I don't I'm not a Joe Rogan guy, even though he's amazing, because it's just not my thing to listen to band. I mean, I love nerdy historian professors dropping podcasts, and I'm like, wow, I just learned 8 things I didn't know. That's the type of experience you gave yesterday, Matt. So don't.
Well, I appreciate that, boys. It's in America, in the world today, people want 3 minutes and out, right? And that's just not who we are. We're not 3 minutes and out. We're just not.
Mm-hmm.
So we have a lot of discussions, a lot of detail, go through the historical. And if you do like it, definitely share it. Share it on Twitter, share it on Facebook, share it with somebody you feel needs to understand the history of currency a little bit better.
Mm-hmm. Yeah, absolutely. All right, guys, we're out. We will be back tomorrow, same time, same station here on our YouTube channel, Halftime Report. We're done. We'll see you guys tomorrow.